Hello, everyone. This is Dr. Kenyon Meadows here, the Invest Doc. We are live streaming here on YouTube. Um, got a user question through the email list. And by the way, if you'd want to send me a specific investment question or anything along those lines, the best thing is to join the email list, which you can click on by clicking on the ebook link. You'll get put on our list. And all you have to do is just reply to any of the emails that come to you. We have a little email sequence that walks you through some of the online resources I use for investment education. And again, if you just hit reply to that, it will come to the business inbox. Oh, how's it going, OW? How are you, sir? Just got a user question that we're going to go over. And I would love for you all to submit questions via the email list, because as content providers, we are always looking for ways we're always looking for new things to put out, and we want to serve you. So the easiest way for us to do that is to answer you guys' questions directly. OW, where you from, man? Where you checking in today? Like to know where all the participants are coming from. Well, anyway, I got a message from this gentleman. We'll protect his anonymity and call him CJ. And he wrote to me and said, "Hey, Doc, I'm interested in finding REITs and stocks to invest in that pay monthly dividends." Just a little bit about myself. I'm a 39-year-old ACST that lives in Louisiana. I don't have a lot of money as a surgical tech, so that's what that ACST stands for. But I do save. I'm looking to start small and grow. My goal is to establish a passive income of only $5,000 per month. If you can help, please let me know. Well, I would say, CJ, that the goal of $5,000 of passive income a month, that is not a small goal. So when you say only, I just wanted to realize that is a substantial amount. 5K a month translates into $60,000 a year. And when you consider that the average household income in the United States is right around there, $57,000 a year, that is quite an accomplishment to get that in passive income. So certainly you can get there, but it just would take generally a lot of capital if you're talking about on the investment side of things. Now, certainly, if you were to you had like a very expensive online course or sold a bunch of books or something along those lines, you might get there quicker. But 5K in passive income, it takes a lot. I see OW is coming to us in New Orleans. Shout out to LSU. I think they're going to get it done on Monday. So anyway, so I thought that I certainly can help CJ out here. I have a number of stocks that I buy that pay monthly dividends. And so first thing, I want to always throw out the disclaimer. This is not financial advice. I am not a financial advisor. And so nothing on here is legal, tax, or business advice. You should always consult with your professional that is familiar with your specific circumstances. So I'm going to talk about some specific stocks that I hold, but again, these are not a recommendation of any type. Okay. So starting things off is the one that has the longest track record that I know of. It's called Realty Income, and this is a real estate investment trust. And if you guys don't know what that is, I have a video up on the site called Investing in Real Estate on Any Budget, Introduction to REITs, or Real Estate Investment Trusts, often abbreviated REITs. So these are companies that you can buy shares in, just like a typical stock. But instead of buying a piece of a company like an Amazon or a Google or whatnot, you're buying into either a portfolio of income producing assets, or in some cases, there are what they call mortgage REITs, where you're buying a fractional share of a mortgage. But the bottom line is you're paying to get access to an income stream. Realty Income, I think they're the longest standing REIT, founded in 1969. Okay. Now, a couple things I want to point out about REITs. Okay. In the top red box, okay, number one, it's currently going for about $73 a share. You can see over the past year in the top red box there, it has gone up about 17% on the year. Now, that is not as high as the S&P 500, which was up about 28% this year. So these REITs, they may not go up as much as the stock market goes overall, but people buy them for their dividends. And the current dividend yield on Realty Income, go there at the bottom, there's 3.73%. Okay, and that's kind of on the a little on the lower end out of the REITs I invest in. But you got to remember, there's always a risk reward type of thing with investing, and Realty Income is viewed as an absolute rock steady dividend payer every month. And so I think people are okay. Hey, the geek surgeon, are you a physician, sir? You generally don't see people putting medical monikers in their name unless they are. So I'd be curious about that. So we're just talking a little income. We had a user question. Somebody wanted to know about income producing stocks that are monthly payers. And so I'm just going over some of mine. So first one here, Realty Income, been paying dividends since 1969 and generally increasing them every year. So people are okay with that steady performance. Okay. So next one here is Apple Hospitality REIT. Now, this is another real estate income trust that I buy. Their specific segment is that they are, hey, Iman, how are you doing? They own hotels, okay? And they actually own a lot of popular branded hotels that you might know, such as Marriott, Hilton, or Hyatt, okay? So we've all stayed at them. So this is another real estate investment trust, pretty modestly priced. I kind of got it obscured there. It's like $15.71. Now, I want you to notice in the top red box, okay, did this stock go up very much over the past year? No, it only went up about 2%. And so it definitely lagged the overall market. Now, as part of the compensation there, you look at the bottom red box and it paid a dividend of 7.65%. Okay. And so that's an annual yield. Okay. So again, if you had $100,000 worth of this stock, okay, it would pay you 765 dollars over the course of a year and split up into monthly payments. Okay, so again, this is another example of a relatively inexpensive way to purchase fractional ownership in a stock, that in this case a REIT specifically, that would pay you on a monthly basis. And this whole monthly basis thing, does it matter a whole lot monthly versus quarterly, which is how most dividend paying stocks do? Well, actually, over the very long term, if you consistently reinvest your dividends, you do eke out a little fractional extra return over time with the extra compounding if you have a monthly dividend payer versus a quarterly payer. Is it enough to sway me to like just buy monthly paying stocks? No, I'd much rather have a company that I thought was solid and was just going to be a regular payer of dividends, as opposed to whether I cared really if it was monthly or quarterly. But I get it. Most of us live our lives and pay our bills on a monthly basis. So seeing that money come in on a monthly basis is just kind of what we're used to. Okay. Next is AGNC Investment Corporation. This is an example of a mortgage REIT. Okay. So this company, instead of owning the physical real estate, okay, they own the mortgage obligations on the real estate. Okay. So they buy notes or mortgages off of people and collect monthly payments that way. And you can see here on the description, it invests in residential mortgage-backed securities on a leveraged basis. And most of the mortgages they buy are ultimately guaranteed by the U.S. government, the Freddie Mac, Ginnie Mae, that type of stuff. Okay. So, this company is relatively new. They were founded in 2008. So kind of right on the heels of the mortgage crash, as it were. So, haven't been around for so long. You can see that did not go up very much over the past year, only 0.84%. Okay. So again, we typically don't buy real estate investment trusts looking to necessarily keep up with the market. We're buying them for the yield and the cash flow. And this one here is doing, it's actually a little on the higher end, 10.7%. Oh, I see T. Kelly. I bought that Apple Hospitality last week. Nice. I would love, T. Kelly, if you could show us a screenshot when your first dividend hits. Okay. Did you buy it on Robinhood? I like Robinhood because it just pops in as a nice little dividend thing there that shows you when it hits your account. And I like getting passive money. So I'd love a screenshot from that. And by the way, in the description, there should be a link to my ebook to get on my email list. And if you want to submit a question, you certainly can, and I'm apt to answer it. We're going through this because one of the users submitted this question here. 39-year-old guy wanted to know about which monthly income stocks that I bought. So that's what we're going through this. And his goal is that he wants to get 5K of passive income a month. So I just tell you, man, that's going to take, if you're just doing REITs and stocks and stuff like that, you're going to need a nice several six-figure account to generate that. But God bless you. Keep pushing. Okay. Now, a little bit of a change here. Okay. Apple agency. Okay. Telus Capital investment. Okay. This is a different class of stock. Okay. This is what's called generally a BDC, a business development company. And what these guys are, how we oftentimes think about, banks as being lenders to businesses. Well, more than 80% of the loans that a bank makes is on real estate. And one of the reasons they don't lend more on small businesses is because it actually takes a lot more expertise within the bank to really underwrite or figure out the risk associated with lending to various different small businesses. And so these business development companies, that's their job. They tend to cluster and get expertise in certain types of businesses. That way they can more accurately gauge the risk. And then they loan money out to these companies and charge, a nice interest rate. Business loans routinely are in the double digits. Okay. It is not unusual for businesses to pay in the teens or even low 20s for business credit. Okay. So that's what Telus Investment Management does. Okay. They loan money to businesses. And as you can see, again, it went up modestly over the past year compared to the rest of the market. That top red box there, about 7%. Okay. So certainly the capital appreciation wasn't as good as the market. But again, the yield was a very attractive 9.45%. Okay. I have TD Ameritrade. I was sitting it for sure. I signed up for email. Thank you. All right, T. Kelly. Great. So this is another one that I have invested in over the past year and plan to hold it and keep it and see those monthly dividends come in. Okay. And then the last one here, another business development corporation, Horizon Technology Finance. Okay. They engage in providing capital in the form of secured loans to venture capital backed companies. Okay. It also is involved in lending and investing in portfolio companies in technology, life science, health information services, and clean tech. Okay. So again, this is basically, and Horizon's is a little different in that a lot of the business development companies, all they do is provide, debt capital. Okay. Loans. Okay. And in this case, secured loans. And how do these companies secure their loans? Well, a lot of the companies they're lending money to, they might have valuable intellectual property, and you can actually put that as collateral towards a loan. Sometimes the owners of the businesses might be required to sign personal guarantees that, hey, if the business fails or whatever, I'm on the hook personally for it. So there's a bunch of different ways that these companies can go about securing those loans. Okay, and Horizon also a little bit different. They will actually take an equity stake as well in some of these companies. So, if there's if they happen to invest in an early stage, a Google or an Amazon or the next big thing or whatever, they can participate in all that upside. Now, you as the passive investor and whatnot, you wouldn't get access to all of that upside. Okay, and besides, they do that with just a portion of the money that they use. Okay, but but it is an interesting way to get some exposure to private early stage companies and do it in a way that's less risky, but also less reward. And you can't violate the risk reward thing when it comes to investing. Okay, so that I hope was a useful thing. Again, I don't tell you guys anything that I don't invest in personally myself. Again, these are not recommendations, but I am telling you that I do invest in these particular companies that provide a monthly flow of income. Okay, so I see we got a few people in here. Any questions while we're on the stream here? I can certainly hang out for a little bit. And certainly look for me to do some more collaborations and live streams in the very near future. All right, I'm hanging out here a little bit. Where's folks from? I see, OW, Louisiana. Geek Surgeon, where are you from? Iman T. Kelly, where are you from? Oh, too much lip smacking. All right, I will try to cut that down. Thanks. Where's everybody else from? Okay. All right. All right. Any questions about any of the particular companies that we went over? Any questions about any of the videos that are on the channel? Okay. I don't see much coming in at this point. I'm going to endeavor to try to put out new content at least once or twice a week. Usually one of it will be something that I come up with, and then hopefully the other part of it should be related to user content. How much should one invest? Is smacking equates to dollar signs. I wish. Hey, I'm just getting used to all this live streaming and being on camera and everything. So I need the feedback. I need the feedback for sure. How much should one invest in order limits, market? Iman, you're talking about order limits and market limits. So that's a question about when you buy a stock. Okay, what type of order do you put into your broker? Okay, any broker worth their salt offers what they call market orders versus limit orders. Most of the time, limit orders, in my experience, I do use them for trading, okay, not investing. If I'm going to establish a long-term position like any of the stocks that I've showed you guys on here, I just put in a market order and let it get filled instantly. And that's where the platform is going to take your order and buy those shares at what's available that instant, and it feels like that. There's always a little bit of a buy of a bid versus ask kind of spread, typically a penny or two between the buyers and the sellers. And if you put in a market order, you're going to get within a penny or two of what that quoted price is. A limit order is when you say, look, say Facebook is selling for, you're looking at it and it's kind of fluctuating between $200 and $205 throughout the day. A limit order would be like, hey, I'll buy Facebook, but only when it hits $199. And so you're not going to buy it until it hits that. And it may hit that or it may not. I oftentimes use limit orders when I'm trying to enter an options position to trade and get the best price there. But That's a whole different thing. Okay. For all the stocks that I've showed you on here, I just put market orders in and get filled like that. Dejan, what are the other stocks he talked about today? Well, uh, very quickly, man, I gave one of the users had a question about what are some of the monthly dividend stocks that I buy, and I quickly went through them here. If you go back to the beginning of the stream, you can check it out. I don't want to repeat that for everybody, but these are 5 stocks that I own personally in my account and have held them for a little while now to provide steady monthly income. Okay, I see Oakland, California. Great, good stuff. Good stuff. I was just out in Los Angeles over Christmas. First time out to LA for an East Coast Midwest boy like myself. That was a very different thing culturally, but useful to see how y'all living out there. All right. Any other questions? I'm gonna post the link really quickly to the ebook and to get on the email list, and you can hit me up there. And we always happy to answer any questions folks have. Let's see here. Do I invest for income or do I invest for growth also? That's a great question. I definitely invest for growth as well. So all the stuff that I'm showing you now, you have your money that's part of your retirement fund. Because besides investing and doing real estate, I am employed, and so I do have a 401k, and that money is invested very broadly in just a general Vanguard S&P index fund. Okay, so that is not exclusively for income. What I'm showing you here is my after-tax money. You can only put so much away, as you know, on a yearly basis for retirement. So I've been blessed to have some extra here. So that's what I do with my after-tax money in these non-retirement accounts, as they call them. Yeah, definitely. So some people might make the argument, well, you're young, you're still far away from retirement. Why not invest that for growth as well? Thinking that over time that will lead to a larger amount of money, and that may be the case. Although when you look back historically, um, dividends have always accounted for a very, very big chunk of the return of the stock market, sometimes as much as like 70% when you look at it over certain stretches. Okay. So, getting some monthly income out of the market, I mean, that's never a bad thing either. I have some stocks with Realty Income myself with M1. Nice to see someone else invested in O stock. Yeah, Realty Income, symbol O there. That's the granddaddy of real estate investment trust. I think it's been around the longest and has been paying dividends for a long time. It's a member, I believe, of the S&P 500. This is a very large real estate investment trust. They own a ton of properties, so absolutely. How are REITs affected by recessions? Well, REITs are there's a different categories of REITs, just like there's every category of real estate. There's residential ones, there's ones that invest in apartment complexes, there's ones that invest in retail, strip mall type shopping centers and that kind of thing. There's ones that invest strictly in malls. There's ones that invest strictly in healthcare facilities like nursing homes and long-term care. So generally, if we have a consumer-led recession where unemployment's high and things of that nature, well, that trickles first up to the discretionary retail type stuff. So retail REITs, I would expect to do poorly in an environment like that. Okay, when you look, I just got this email to me from the folks over at the Motley Fool, the worst performing stocks this past year out of the S&P, and it was stuff like Macy's and Kohl's and all these old school retailers and whatnot. Well, there are some REITs out there that own the mortgages and buildings that a lot of these retailers are housed in, and so you would expect them to do more poorly. And just like, say for instance, healthcare is a more defensive type sector, they say, I would expect REITs that hold stuff like that to hold up better in a recession. The thing that would universally affect all REITs in a bad way is if the Fed were to raise interest rates. And let me explain this one point. This is very important to know if you're going to invest in REITs. REITs, they have to pay out by law 90% of the money that comes into them. Okay, so they don't have a lot of retained earnings, as we say. So when a REIT wants to grow and buy another income producing property or buy another mortgage obligation, it has to constantly borrow money. So REITs are very, very sensitive to interest rates. So unlike an Amazon or a Google, when they have a profitable quarter, they might pay out a little dividend. Most of those kind of stocks don't. And they keep all that money in house and they can finance an acquisition or beef up their marketing or do whatever they want to do out of their retained profits. REITs have to pay out 90% of the money to the shareholders. And the reason they do that is to avoid being taxed at the corporate level. Us as the shareholders, we bear all the tax, okay? So when interest rates start to climb, and who knows when they'll be, we've had record low interest rates for forever. But when they do start to climb, the cost to borrow for these REITs to do business will go up. And that's something that would affect them all across the board because they all have that limitation of not being able to hold on to a lot of retained profits to do stuff. Do you reinvest your profits or do you keep the profits? I reinvest, actually. Currently, I only invest for growth, but I plan on yes, because I want to retire early. Yeah, Gerard. Yeah, I reinvest. And so that's compounding things, as the dividends come in, I buy more shares of these things and you start to see that forward momentum. And yes, I do view this as eventually a nice separate source of passive income so that by the time I retire, I'll be able to cash out some of my retirement funds. We'll have the real estate and then some of this after tax money that's also grown. And yes, I've been paying taxes on it, but it's been producing income and it's still growing too. So to have all of that, so definitely. Healthcare probably makes more sense to me. Well, again, healthcare is, I work in the healthcare sector. It's one of those things that in general, it's been a steady producer of jobs because you can't outsource it. For the most part, that direct care. Maybe one day we'll figure out how to do that. While there is some artificial intelligence and some automation and that kind of thing making its way in there, it's still very much a people intense type of business. And the population is aging. I forget how many several thousands of people turn 65 every month. And so we've got that baby boomer population is going into retirement. So things like nursing homes, long-term care facilities, assisted living facilities, those make sense. And there is a REIT that I own. I believe it's called LTC, long-term care, ticker symbol, that they specifically invest in those types of facilities. If you're interested, not a recommendation, but that's just one that I invest in personally that has exposure to that kind of stuff. Okay. So yeah, great stuff. Great stuff. Questions coming in. I love it. I love it. Okay. I'm just making sure I didn't lose any in here. Okay. And John, we got a quick second here. So Realty Income, the other one, Apple Hospitality REIT. Shout out to T. Kelly. She bought some last week after being exposed to it. And guys, I have a 20-minute video on real estate investment trusts on the channel, which you're welcome to check out too. AG&C, this is a mortgage REIT. They don't actually own the properties. They own the mortgage notes. So this is basically a way for you to be the bank and loaning money on income producing properties. Telus Capital Investment, they're a business development company loaning money to businesses, paying a nice dividend, 9.5%. Horizon Technology Finance, another company, loan money to businesses, and they also pay a nice 9% return there. And so let me see if I can just quickly post a link here. Get a few more of you folks to join in. Please hit the notification button. Obviously, you guys have already subscribed, which I appreciate immensely. Let me know what you want to hear about. Shoot me some screenshots when you guys open up your Robinhood accounts or whatever else. Let me know when somebody buys some property. That's my number one asset class that I like is physical ownership of real estate, buying a rental house. I think that's the best thing in the world there. So I'll post that, and let's see here. Yeah, I think that'll be it. All right, guys. So appreciate you hanging out with me a little bit. I'm actually going to check out a little bit of these playoff games today and relax a little bit. We'll see you next time. Okay, thanks.